First of all, welcome back. So this should be a fun video. Is this in focus? Sort of, good enough. In this video we're going to be going over my last GME projection, which was like 2 weeks ago, and pretty much everything I said in that video happened. If I pull up charts quickly, there were three things that we were looking for, right? First and foremost, I talked about GME for like more or less the entirety. I was saying we were going to come down to 22 when we were here at like, you know, mid to high 30s, and it happened, sort of. It's not done. I don't think it's done. I'm going to provide a case for bottom being in and bottom not being in. I lean towards it not being in, which I'll show you, but it does not mean we won't, you know, see a little bit of fireworks this week. You know, I don't think the upside is done quite yet. You're saying GME under 28.34. I know some of you remember that number, you should. We were saying Bed Bath & Beyond was going to have some sort of upside move before continuing down, and we were saying that the S&P, you know, like the broad market, was about to take a shit. And all of those things happened within the last 2 weeks. So what does that mean moving forward? A few things. So I guess what I'm going to do is I'm just going to put my new GME, my current GME count on screen. And if you guys remember, on earnings day, I was saying that we would probably see a move up to like 28, like mid 28s, and that happened too. And so when that happened, I knew more or less what was going on because, you know, I expected it. So first and foremost, I'm going to show you guys the projection leading into earnings, because I was telling everyone to sell some puts, and about as free as money gets. And yeah, so this was the projection we were not quite. Yeah, this was the projection that we were working off of going into earnings. And I mean, as you can see, if I pull up the current count, it's, you know, it happened. But I don't think that we have finished. And I've like tweeted these numbers up before, but I think that what we're going to be doing now is ignore all these numbers except for 31.88. These are just like your smaller degree numbers that we're going to be, you know, watching into tomorrow. But yeah, I see, you know, up to like 32-ish is expected, and I'm going to give you the rundown right now. So first and foremost, we need to understand the, you know, the longer term GME count. And I explained this very well in my last video, and I hope you guys caught that. But if for whatever reason you didn't, we'll briefly run you through what's going on. So, as we explained before, we are currently in a big wave 2. This shouldn't be a surprise. You know, the stock is down, you know, from 48 down to 23. That's a pretty big move. But the key takeaways from the last video were that it's a big ABC, right? A leg and B leg are going to be an ABC, and the C leg is going to be 1, 2, 3, 4, 5, and it's going to come below our A leg low at 28.34. An expanding flat, wherein our B leg is greater than our A, and our C leg is greater than our B. And, you know, really quickly, these numbers won't be exact, I'm on TradingView, but if we measure the length of B, right, like this, and reject it, we want to see underneath the yellow, and we got underneath the yellow. So that's it. Like, the expanding flat is valid. Do I think it's complete though? That's the question. And my answer to that is no, I do not. But this could change. This can obviously change. What I think we're doing right now is just a big wave 4, and, you know, this picture does it justice because it's clean. You know, I don't really have all the crazy subdivision on screen. If we just pull up a daily chart with nothing on it at all, completely clean, I guess clean enough, right? If we look at, right, we have a swing down and a swing up, and this whole move, right, we're just selling the whole time. There's no real, you know, change in trend. There's no significant buy pressure coming in until down here. So yes, this is obviously a trend change, but remember, we are expecting, you know, 2 corrections on this whole move down to our 22 target. And so to measure where we can expect this to reject, you know, with like base levels, we're going to go from the high of our wave 2 to the low of the 3. Right, and that gives us these levels, 28.64 and 31.87. Now, if you pull up an after hours chart with our earnings, right, you'll notice that 28.64 was where we got to on earnings, and that's where we sold off from. So this meant here's what that meant, right? It meant one of two things: that the wave 4 was complete at that rejection at 28.64 after hours, or we were going to continue to move out of the low in an ABC fashion. This being our A, this being our B, and we would expect to move up with the C leg in 5 legs, right? 1, 2, 3, 4, 5, you know, however the 4 and the 5 play out. But if we're looking for big base levels, gonna go from the low on earnings to the high on earnings and project it down to our low point, right? And this gives us, you know, a big base level to hit at 29.67. I've said this before. And, you know, above 29.67, we're looking at 31. And then our big 0.382 level where we have confluence with the 1.382 fib is 31.81 to 0.87. Let's just call it 32. So moving forward, my thesis is that we're going to fail, right? We're going to fail somewhere within this range. That's my thesis moving forward. And if we do fail somewhere within this range, then that sets up this leg down to 22. Now, going back to what I was saying about all the gap fills, right? Pull up a daily chart. A couple things that we need to talk about here. Let's clear these off screen. Clear, clear, clear. I don't know what this chart is. This is like something really old. I'm just gonna delete it. So anyways, right, I totally lost my train of thought. What was I gonna say? The gaps, right. So let's just mark all, you know, the downside gaps on screen right now. We have one gap here. We have one gap here. It looks like it's not, but it is, because look, ready? The close here on earnings was 24.04, and the low of the day the next day was 24.07. So that's 3 cents unfilled gap. You can say it's insignificant. The gap isn't filled. That's like just how it is. And the infamous gap down at 22, which is down here, right? So that gives us these big base levels as gap fills to watch for if we do turn down and fail, you know, the 32 range I was talking about. Yes, that's all. This is another important point. When I trade, I have no indicators on at all. I literally only trade reactions to Fibonacci levels. To everyone that says you need indicators to trade or EMAs or whatever, I call bullshit, and everyone in Discord is living proof of that, because we literally just look at Fibonacci levels when we trade. But here's another part, right? Momentum divergences. This is super important. So one of two things can happen here. I'm gonna continue talking on the bearish view because I'm pretty convinced in that, but you know, it can go either way, obviously. This is important, right? Your wave 3 is always gonna be like the lowest momentum wise, right? Because that's the strongest selling point or it's the strongest buying point, depending on if the trend is up or down. In this case, our wave 3 is down, so you know, our momentum or our RSI is going to hit a lowest point on that wave 3, right? So now we have that, and the RSI is clearly, you know, resetting and moving to the upside. So what we would expect if we're correct in this bearish view, right? And let's just draw the base targets again. If we are correct, what we will expect is a rejection, you know, let's just say up here at 32, and then move down to here at, I don't know which one, 22, right there. But what this does, right, we have this move with the RSI, and then when the RSI comes down, we have this. My like camera just cut out because I ran out of storage. I'm assuming it's right here, but what I was saying was, right, this is our lowest, you know, point from a momentum standpoint. If we're correct about, you know, coming up to here to our 31.85, 32, whatever, if we come up to there and fail, because our RSI has been reset on this move up, this sets up the divergence on the low, and this always happens. So basically what I'm saying is, if we fail 32 and we come back down to set a new low relative to our low point at 23.39, if we come lower than that on a higher RSI print and we fill our gap at 22.29, then that's probably the bar. However, it's important to note that, as I was saying before, the expanding flat is deemed complete with a loss of 28.34 because our B leg, or because our C leg was longer than our B. So the correction is like, it's technically complete, but we don't know if the bottom has hit or if it's still coming. And that's where we are in the trend. I think it's not, but I could be wrong. I don't know. We'll see. Either way, I'm long right now, so it's not an ego thing. I'm just calling it how it is because I'm fine with either outcome. I would like this though because it's just super clean. And yeah, okay. Briefly, we'll touch on SPY. It'll be slightly different. We're gonna come a little bit higher, I think. Probably, I don't know, 411 to 415-ish, and then die. Something like this. You know, it might not, but this is what I'm looking with here. And if we're correct about this, you know, we have a big catalyst week coming up. We have CPI, PPI, jobless claims, I believe, like back to back to back. And the way I see it is it's setting up very similar to, you know, this whole move down here. Possibly, we'll see, I don't know, but that's what we're working with now. More or less, you know, this deviates. We've been long from down here anyways, so we have room for error. But yeah, that's pretty much where we're at. I get, you know, going back to what happens if this is correct and we come down to here, we don't come below. I mean, you guys know all this already. The invalidation point for all of this is 19.44 because that's setting a lower low relative to where the big wave 1 started after the entire correction. So that's established. 19.44, it can't come below that. If it does, then this whole view is invalidated. However, fuck, it's not clean right now. I don't even have like the energy to clean it. It's a mess, and fuck. But I mean, what you see here is like pretty much all you really need to work with, I guess. We have downside gaps and upside gaps. Choose your fighter. If we're bullish, right, we'll still probably come down and retest, you know, this 24 zone. I can't really see a scenario where we don't. But the, you know, the invalidation for more downside, it only comes in when we come above the wave 1 low of this flat, which would be horizontal line here, like, what is this, 38.7, 30.8, something like that. So it's only, I'm only fully bullish once we come above there because that invalidates the view for breaking a new low. But, you know, we can literally get up to here. Granted, you know, if it does come above 32, then I would say the likelihood of setting a new low is dwindling, like it's not quite as strong. But I'm sticking with what I see. You know, I've been calling this pretty well for the past few weeks, and I'm just going with my gut. Before I sign off, this is a really interesting chart that was brought to my attention, which is super in line with what I think happens. Right here, that's it, right? And yeah, this is similar to, I'll pull it up on the chart here, pretty much the same thing as this whole downswing from here, right? 1, 2, 3, 4, 5. So I think we're like somewhere in this range. Well, here I guess now. And not here. Yeah, pretty much it. I think I've covered about everything. As always, if you would like to come trade with us on Discord, I'm in here every day. The link to join is in my Twitter bio, as it always is, and I'll link it in the video too. I hope you enjoyed the information presented here today. We'll see if it's right. It's been right so far. I don't see why it'll be wrong now. But if it is, we know where, you know, the view for more downside is proven wrong. And with waves, it's always you're correct until proven wrong. So we know we're proven wrong. Okay, cool. Thanks for stopping by. Catch you guys in the next one, whenever that is.